Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of March 13th to 20th. Happy spring. Before we get started, though, I want to thank the Olshan Luxury Report and Urban Digs for their amazing reporting. We're going to get started, as we always do, with the luxury market report for last week. There were 28 contracts signed at $4 million and above. That is 8 fewer than the previous week. Condos, as they often do, outsold co-ops 21-5, and there were 2 townhouses in that group. So the number one contract last week was a brownstone at 138 East 65th Street. It was asking just under $17 million. It was reduced from $22 million when it was listed at the end of December 21. The 5-story house has a little over 5,300 square feet. It includes 5 bedrooms, 6 bathrooms, an elevator, 2 terraces, and a garden. It has, as you can see, a really distinctive facade, gorgeous. These copper-clad bay windows, wow, really a stunner. The house was purchased in 2012 for $10 million, and then renovated. The number 2 contract was 48A at 53 West 53rd Street. It was asking $15.25 million. It was reduced from $18.2 million when the building started marketing off of floor plans in 2015. This condo has a little over 3,800 square feet. It includes 4 bedrooms, 4.5 bathrooms, and a study with north and east views of the city. Ceilings are 11 feet, so lots of volume in this apartment, and it has a 28 by 21 foot living room and a 22-foot master bedroom. The building was designed by Pritzker Prize-winning architect Jean Nouvel, with interiors by Thierry Dupont. Amenities include a concierge, a fitness center, 65-foot lap pool, golf simulator, wine room, library, theater, storage, and a children's playroom. We're going to take a look at the stats for last week. The total weekly asking price sales volume, 208,646,990. The average asking price, 7,451,678. The median asking price, 5,950,000. Average discount from original ask to last asking price, 5%, which is interesting because if you remember from the previous weeks, last few weeks, the discount was much higher. If you recall, 10%, 12%. It's been kind of trending in that range for quite a while now. So interesting to see that it's dropped back over the last week to 5%. The average days on the market, 744. Okay, that's it for the luxury report. Any questions, please post them below. As always, if you find this kind of information helpful, please subscribe to my channel so that you can get these reports as they come out. And as always, if you want to share them with someone, think they might be helpful to someone, please do so. All right, we're going to take a look now at what happened in Manhattan. We're going to take a look at the 1-week chart. The supply, 442, that's up 4.5%. Contracts signed, 266 for last week, up a little over 8%, and the off-market properties jumped a bit, 138 so that's up about 14%. So if we take a look at this 1-month chart, we see the supply is up over 31%, 1,698 properties came on the market. The contracts signed a little over 1,019. That's up 33% for the month. And the off-market properties just up a smidge, 499. That's just a little over 1%. If you take a look now at the market pulse, we see that we continue to be in this neutral market. So the supply and the demand in Manhattan basically on par. And we're seeing that, we're just holding steady for a while. I have a lot more information on that. So I'm going to share that with you in a minute. I want to share the liquidity pace chart. This is for Manhattan. This is a chart that it's constantly moving, right? Because it shows the contract activity for the Manhattan market. The low liquidity, just to kind of give you context, low liquidity represents a slow market, while high liquidity represents a robust market. Where we're at this moment in time is 1,000. What we would normally be seeing would be about 1,100, and we were much lower than this. I think we were in the 500s a couple of weeks ago. So, we're kind of getting into this higher liquidity state, which is, I think, in some ways good because it is normal for us to see higher liquidity. And it is also giving buyers some additional choices because they didn't have a lot of inventory to look at over the last few months. If we take a look at the supply chart, we can see that the Manhattan inventory is growing, but it is growing at a somewhat slow pace. And you can see the pending sales are just up a tiny bit. The pace has seemed to slow comparatively over the last few weeks. And we see that the weekly new listings fell slightly from the last week, but they do remain over 400, which is signs of a stronger market from a liquidity standpoint. We see that the weekly signed contracts have ticked down a little bit, probably to be expected after last week on Wall Street was a bit wild. And we can see that the cumulative total of contracts signed in 2023 is still leading 2019's pace. So that's great. If we look at the net inventory trends, we can see a slight build in the inventory, but condos versus co-ops, condos remain in the red. We are seeing more co-op inventory than we are condo inventory. We'll have to see if that continues. I think that this is kind of an interesting chart. If you look at this one, it is showing the optimal time to list in Manhattan. And this is for any bedroom configuration in all of Manhattan at all prices. And the data is showing us that the optimal time to list in Manhattan is March, which is where we are right now. So perhaps this is why we are seeing this a bit of an uptick in the inventory. We're going to continue to keep an eye on that. And that's it for Manhattan. Now we're going to take a look at what happened last week in Brooklyn. As always, if you have questions, post them below. I'm happy to answer them. So let's take a look at the 1 week chart for last week. The supply was 191, down a little over 11%. Contracts signed were up 147, up 14%, and off-market properties up 42 and change percent at 74. If we look at the 1 month look at supply, 765, that's up almost 18%. The contract signed 517, a little over 14%. Off market 263, almost 18% up. We're seeing that we're in a neutral market in Brooklyn. We see that Brooklyn inventory is finally rising, but at a slower pace. We see that with the demand, the pending sales are kind of struggling a little bit to maintain this uptrend. And we're seeing that when it comes to new listings, they tick down a little bit. And the supply in Brooklyn remains fairly weak right now. The contracts signed, interestingly, unlike Manhattan, we saw the weekly contracts in Brooklyn rise a bit, which is kind of noteworthy given what happened last week. Here's this net inventory trend for Brooklyn. We can see that the net inventory trends in Brooklyn are still showing red. Although, if we go back and think about what we saw in Manhattan, it's the co-ops that are kind of rising in inventory, and In Brooklyn, it's actually the townhouses. Condos and the co-ops are still kind of quite low, but if we're seeing a rise in anything, it's the townhouses. I find that particularly interesting because when we were going through our big recovery post-COVID, those 16 months, I mean, we could not keep townhouses in stock. Every time they would come on the market, typically they would sell very quickly. So it's interesting now there's been a bit of a pause on the part of the buyers when it comes to the townhouses. Perhaps those sellers who are putting their townhouses on the market are getting a little ambitious in their pricing. We'll have to kind of see how that all plays out. All right, that's it for Brooklyn. And again, questions about Brooklyn, please post them below. Here's what I want to leave you with. Some thoughts for sellers, some thoughts for buyers. We know that we are in the thick of the spring market for New York City. Historically, like always, the strongest part of the market for the whole year. We also know that we are in a time of a fair amount of uncertainty, lots of noise going on. Banks, Wall Street, you name it, in the world, lots of stuff. So here's the takeaway for this week, and maybe something that will go beyond the week. Here's some thoughts. Start with sellers. You can see that there is this bump in liquidity. Take advantage of this bump and get your accepted offers signed. And just keep in mind, as I mentioned, we are in the thick of the spring market. You essentially have until the end of May, maybe sometime into June, until the season begins to slow down and as the potential, let's call them macro risk, and this uncertainty could well start to rise. Also, you've heard me say this before, but listen to what the market is telling you. If you're not getting the traffic and more importantly, the offers that you want, adjust your price and do it sooner rather than later. You do not want to risk missing this market. Also, just a thought on this. Some of the people that I'm talking to right now are thinking about waiting to put their property on the market. Maybe they want to wait until the fall, given the unknowns of what lies in the months ahead and its potential impact on the liquidity of our markets. If possible, consider moving up your timeline and try to get a sale, hopefully a quick sale, in today's market. Now, for buyers, we see that the supply is starting to trend higher and the deal volume, kind of overall, is starting to trend a little lower. I mean, it's probably too early to tell if this is a reversal of the trend that was in place for the last 5.5 weeks, where we were seeing a kind of a seasonal strength. We don't really know if this is the beginning of a reversal, but keep an eye on that and be prepared. Sellers are, at least at this point, not very fearful. So you may get pushback on low bids. So be aware that if you really, really want something, you're not the only one in the market. And so you have to decide what it's worth to you. You don't want to take the chance of losing it because you go in with a really low ball offer. From a timing standpoint, it's entirely possible, as I mentioned with this, for the sellers, that our market, this spring market, could kind of go on even into June. And that is, of course, assuming that, it's barring any kind of other further shock to the markets. Final thought for buyers: if you missed your peak leverage a few months ago, you may get another shot at that over the summer as the macro risks and the seasonal slowdown kind of converge and, in July, August. But let's keep an eye on that. Okay, that is it for this week's look at the state of the New York City real estate market. As always, please let me know if you have any questions. Please subscribe. I will be back next week with the very latest news on what is happening in the luxury market, the Manhattan market, and the Brooklyn market. In the meantime, take care.